Thanks for clicking. Will a downturn in the Canadian real estate market crash Canada's economy? This is the question being asked in a new report just released by Capital Economics. The downturn in Canada's real estate market is definitely upon us, with our four largest markets showing steep declines in April, and RBC showing that Toronto's real estate market crashed from a heavily seller's market to a balanced market in just a period of over 2 months. The decline in Canada's real estate market has been so swift in April that some are already arguing that the Bank of Canada might have to put on the brakes on the rate hikes before they even get off the ground. Reverse course with a 1% policy rate and 6.7% inflation.
Psycho talk.
But it very well could be the case, as Capital Economics says that any further downturn in our real estate prices, which is growing more and more likely, could very well put Canada into a major recession. So what I want to do today is go over the report from Capital Economics, look at how far they think our real estate prices could fall, what that would do to our economy, and what to look for next. Speaking of what to look for next, we do have the inflation rate coming out next week, which will have a big impact on the pace and the severity of the interest rate hikes coming down the pipe from the Bank of Canada, which will have a, as we've seen, big impact on our real estate prices. We'll obviously have updates out on that on this channel. Click like and subscribe to get those updates, but for now, let's get into this report. The Capital Economics report starts out by looking at mortgage rates, which have doubled since September of 2021. With these higher costs of borrowing and a housing market that went nuts over the last few years, going much higher price-wise than that was supported by the fundamentals, Capital Economics sees our house prices declining in Canada by 10% over the next year. This 10% dive in our real estate prices will also cause a corresponding dive in residential investment. And as residential investment, construction, renovations, etc., represents such a high portion of our GDP, this will cause our GDP to fall as well, cause our economy to slow right down. However, the report argues that should Canadian real estate prices fall below 10%, this could set off a negative feedback loop, whereby recessionary pressures, job loss, leads to forced selling, evictions, powers of sale, which would lead to a further drop in home prices. And that further drop in home prices would lead to a further drop in residential investment, which will lead to a further drop in home prices. You get the idea.
Yo comprendo.
Well, the report does note that we are at least partially protected from the impact of higher interest rates, as so many people have variable rate mortgages with fixed payments, and so many other people have fixed rate mortgages which won't come to maturity for at least 3 or 4 years. It does point out, quite rightly, that history has shown that economies that have high amounts of consumer debt, high amounts of debt levels as a whole, are particularly prone to unknown unknowns. That is, exogenous shocks which could lead to major downturns. For example, should some external event lead developers to be unable to pay their bills and buyers to be unable to get their deposits back, which isn't out of the realm of possibility, we could very well be looking at a 25% reduction in our house prices, and like we said, we talked about the negative feedback loop. The report says that should house prices fall below 10%, should we start to see a major recession in Canada, the Bank of Canada will reverse course in 2023. It probably won't reverse course down to the 0.25% policy rate that we did have.
Well,
but it will stop the tightening and it will return, I think it's still there, but it will return to a loose monetary policy. So, to summarize, should house prices tumble more than 10%, we could be looking at a major recession. That recession will cause house prices to tumble even more, and on it goes.
Sounds great.
And I think this report and our slowing real estate prices points to the tightrope that the Bank of Canada is currently walking, that we've talked about so many times on this channel. The Bank of Canada right now has to manage two very different parts of our economy. One, the real estate sector, which we leaned on so heavily during the COVID lockdowns, and the other, the rest of the economy, which is currently in the midst of massive inflation. In its toolbox, the Bank of Canada basically has one tool: interest rates. On the one hand, it is trying to slowly cool down our real estate market, and on the other hand, it is trying to very quickly cool down our inflation rate. And it's only using one tool. This is definitely going to cause headaches for the Bank of Canada, for Bank of Canada Governor Tiff Macklem, as he tries to walk this tightrope going forward. And it really does make you wonder, what choice will the Bank of Canada make if capital economics is correct. If we start to enter into a major recession due to these rate hikes, due to a major slump in our housing market, but our inflation rate is still high, if we are in stagflation, will the Bank of Canada do what central banks did in the 70s, in the 80s, during the Volcker moment, when they, despite a slowing economy, they still maintained high interest rates in order to cool down the inflation rate? Or will they let inflation run rampant in order to reprop up the real estate market, reprop up the banks, which capital economics says could very well face their own tightening should we start to see a major downturn in real estate prices. We could start to see a major tightening of the credit markets, of lending, which again will create its own negative feedback loops. So definitely interesting times going forward, and what the Bank of Canada will do vis-a-vis interest rates and our real estate market should prices continue to plunge. We will have updates out on that inflation rate like we talked about next week, and of course on the real estate data that is sure to be out in a few weeks from now, as well as the Bank of Canada's decisions. If you want to get those updates, make sure you click like and subscribe, and thanks so much for watching.